my last video, somebody commented, "What's going on with Lucid?" And so that got me thinking, what is going on with Lucid? I know that they were struggling with production numbers. I know that they were also struggling to get those deliveries up there with the production. I know that the deliveries fell short of their production, and their production fell well short of what they anticipate. Other than that, I know that there was some volatility that took place in the markets on Friday due to a rumor about a potential buyout opportunity. And so, well, that really got me thinking then, would this even be a company worth buying out? So for this video, I put together an earnings estimate for Lucid for Q4 2022. So all the numbers that you see are projected based off the information that I have and my take on where I think that Lucid is going with this. So I'll share that estimate with you and the numbers and how I constructed it. And then also my thoughts on about, will the acquisition actually happen? What kind of investment would the sovereign fund out of Saudi Arabia be making should they happen to buy out the remaining shares of Lucid? Let's check it out. I'm Dr. Stock. Let's get right into it. So just a really quick start at the daily chart so you can see the downtrend that Lucid has been on, along with a lot of the other unprofitable growth companies that are out there. And also you can see the volume that's relatively low compared to the volume that we had on the last trading day, which was January the 27th. So when we take a look at that intraday, and we'll go all the way down to 5 minutes just so we can really see this price action take place. You can see these comparatively low volumes that take place all the way up until 12:20 to 12:25 because these are 5-minute intervals. And within just 90 minutes of time, there was just a substantial run up, which it speculated that this was a possible short squeeze that took place with a quick run up in funds and the shorts hurrying to cover. So there's a lot of buying, showing the increased volume that we have. And then also, I believe at this time, it caused a breaker to trip. So trading was halted for that time period and then resumed trading. And then we can see that fall off significantly from there. Just a very steep drop from its high of about $17.80 per share. And then you can see it tapered off here. I think it closed at $12.87 for the day. So just in case you missed Friday, just an incredibly wild day of trading for Lucid. I think it was the 6th most traded stock on the NASDAQ on Friday. From that, let's move over to my earnings estimate. So here, what I have are the confirmed deliveries for Q1 through Q4 of 2022. Also the total displayed for us when we see that here on the spreadsheet. So like I said, these are confirmed. And then from that, I have the first 3 quarters revenue. These are taken from the 10Q forms, the quarterly filings through the SEC. And then from that, we have my projected revenue for Q4. And what I based that and then I also have the projected full year of 2022 being the sum of all those revenues so far. So how I did that was I took the revenue per EV. And so you can see for Q1, it was about $160,000. When we look at the revenue per EV delivered, I should specify that. Q2 dropping down to 143, Q3 dropping down to 139. And so I took the average of the most recent 2 quarters, being as they are the closest two together, figuring that it would be a little bit closer to what we see for Q4. So that's what we have there then is an average for the revenue based off of those EVs. And then from that, I was able to come back here and put in that estimate. So when we look at that, there's the revenue for Q4 for the 3 months ended December 31st, 2022. And like I said, this is my own estimate when we look at these numbers. So you might see other estimates that differ. And when we look at that, I also have a cost of revenue also projected here. And for that cost of revenue, when we look at the previous cost of revenues that we have, you can see almost 246 million, 292 million, 492-ish million, and then finally the projection that I have of 602 million. And where that comes from was a small linear regression that I made, if I can get it to come up on screen here. And this is a limited amount of data. So when we look at a scatter plot that only has 3 data points on it, being the short lifespan that we have for actual deliveries, which is pretty much just 2022, that's not a lot of data to go by. So I used a linear regression for this, and this is something that we could see change drastically by the time we get the 4th quarter earnings reported. Hopefully for Tesla, for Lucid, what we want to see is this cost of revenue, which is here on the y-axis, the vertical axis. We want to see that drop significantly from where it's at right now. we have 1.83366 times X being the revenue that comes in. So for every dollar of revenue that comes in, that cost of revenue is $1.84. So they're actually losing about $1.84. And plus, that's also off by, you also have to add 100 million. So I have that down here in yellow for you. That's the interpretation that we get from that linear regression model that you see on the screen. So like I said, not a lot of data. So don't put a lot of store in this. Give it a few years, take another look at this, and we'll get a much better idea of the regression curve that we're looking at. It might not even be linear. Hopefully it drops from here. We actually want to see the cost of revenue decrease in comparison to the revenue. So we actually want this number here to go between 0 and 1 instead of being above 1. Let's move on from that. So cost of revenue, I got that calculated from the linear regression model. So you can see that's actually down here, I'm sorry. So I have it right now calculated at $602 million. So over $500,000 for cost of revenue, being that it cost them more to produce the vehicles as they delivered more vehicles in Q4 of 2022. Hopefully that cost is coming down and that this is an overestimate because we don't want to see these climbing estimates as we have. It's climbed every quarter in the first 3 quarters, significantly so in Q3. When we look at the delivery numbers, we went kind of close to double from Q1 to Q2, and then again close to double from Q2 to Q3. And so when we see that doubling take place, and then we look at the cost of revenue, some of that could be explained from Q2 to Q3 by that sharp increase in the number of deliveries. Being that we had another sharp increase in deliveries from Q3 to Q4, I think it's reasonable to say that we will see a sharp increase in that cost of revenue for Q4. So I think that this estimate is one that's reasonable to go with. So research and development sticks around $200 million per quarter. SG&A, $187 million, again projected from earlier. And then total cost and expenses. So this would be the sum of the 3 that you see above, almost $1 billion. And so when we take that and subtract it from the revenue that we brought in, you get almost $717 million loss from operations. Other income, $95 million. So when we add that in, we get a net loss of about $621 million. We can see the net loss attributed to common shareholders. Oh my goodness. There we go. Helps if I spell common correctly. I'm going to have to fix that. Hit the save button. There we go. Much better. So also for basic and for fully diluted shares. And you can also see the number of basic and fully diluted shares. I have those listed, and that leads us into the projections for the quarterly earnings for Q4 2022, which I have them at a loss of 34 cents per share for basic and 38 cents per share for fully diluted shares. And from that, I also have the closing price from January 27th at $12.87 and the associated market caps that go around with that. So if you look right around 23.5-ish billion dollar market cap right now. So with that being said, I also took a look at the price to sales ratios. So for 2022, for a price to sale ratio at the current stock price, share price at $12.87, with the deliveries in for all of 2022 being 43.69, that comes out to a price to sales of 37.80. That's steep. What that means is that an investor who puts $37.80 of investment into Lucid is getting $1 back in revenue for that. And so that's not necessarily all that good of an exchange rate. You want that number to be under 1, and we are well over that, but this is a high growth company that's expected to ramp up significantly. So if we 5x the deliveries for 2023, that's what I have in this box right here. So 2023's estimate, assuming that we do a 5x on the number of deliveries, which given their production schedule that they have right now and reaching capacity of full capacity of 90,000 vehicles within 2023 and associated headwinds, especially if we see a slowdown in the economy, I think that this is a reasonable number. Hopefully it's on the low side. And if this is on the low side, that 5x isn't enough, then that shrinks this price to sales ratio even more, which is even better because right now at just 5x, that's $7.63 invested for every dollar in revenue that comes back in return. And then from there, 2xing the number of deliveries for 2024 from the previous year. So 381, 2xing again for 2025. And by that time in 2025, the Saudi Arabia I think AMP2, it might be called, the facility in Saudi Arabia for producing Lucid vehicles, Lucid EVs, should also be online. And so that ties into the 2026 number, which by that time we finally get a price to sales ratio at the price of $12.87 per share of 0.95, assuming that we have approximately 174,760 vehicles, and that goes back to about 140,000 for revenue per EV. So there are a lot of assumptions in here, and this, besides projecting, isn't really meant to be accurate. It's meant to be a living document that's updated over time. So it'd be exciting to see on February 22nd of 2023 is the announced earnings date for Lucid, and it would be nice to see those come out, see what I got right, see what I got wrong, see what they say the production estimate is for 2023, and hopefully it's something that they don't have to continuously revise down like they did. And then we had 2 separate downward revisions for 2022, and they were not small revisions. I think it was about 20,000, and then it dropped down to like 13 to 14,000. Then it got cut in half down to 6 to 7,000. And not only was it just a tough macroeconomic environment, and including high inflation, including supply chain issues, and this is a company trying to start up with those headwinds taking place. This is just going to be a very expensive start for them. So those are things that we have to keep in mind, looking for that as they continue to grow, and hopefully they have enough cash to last them. As of their earnings report in September, prior to their most recent capital raise that they did, the equity raise that they did in December, they had enough to get them through 2023, and now hopefully they have enough to get them through at least another year beyond that, through 2024. So we'll see as they expand. Right now they're in the United States. I believe they have one in Vancouver, Canada. I think there's also one more in Canada, maybe Quebec, and then also their European expansion should really kick off this year. And they also have other model lineups that are coming along as well. Lithium is going to be one of those constraining factors, the price of lithium, I should say. They do have a deal with Panasonic to produce those batteries, and they do have some in-house parts that they produce as well that really build out the efficiency of their vehicles. What exactly then is Saudi Arabia getting out of this? Well, what they're getting out of this is skin in the EV game, and that move away from oil that we see in the green movement happening globally. Whether you agree with it or whether you don't agree with it, Saudi Arabia has big ties to oil. However, they're trying to diversify their portfolio into other areas outside of oil, and EV might just be one of those places where they might have a really good shot at seeing a really big return on investment. As of right now, the PIF already has a 62% stake, so they're majority shareholders in Lucid. So it would just be a matter of buying up the remaining 38% of the shares in order to take the company private. So it is something that could happen. At what price point does that happen? $12.87, honestly, depending on the delivery numbers, the production numbers, depending on what we see for demand, that is something that could be a little bit rich. However, if demand stays strong, if we don't see as deep of a recession, if they're able to really push those production numbers, if they're able to get the deliveries out, if their expansion goes well, then $12.87 could be a little bit light. We could see it here. I'll put it up on the spreadsheet for you. I'm going to zoom out a little bit so you can see how these numbers change. If we put in $15 as the share price, you can see the price to sales jump up, and then even by 2026, we don't see the price to sales go to 0.96. Mind you, price to sales does not indicate profitability. Profitability is a separate consideration, and if they're really looking for a return on their investment, that means that Lucid has to go profitable at some point in time. So we'll have to look for that roadmap to profitability to see when that happens. I went out to 2026, so that way we could see last year and then also the next 4 years, so to give us a 5-year metric that we have here. I would be surprised to see Lucid go profitable in 5 years, but we'll see if the EV booms the way that it's expected to, and if Lucid is able to really be a major player in that, if they're able to ramp their productions and control their costs, maybe they do hit profitability in that amount of time. So 15, maybe a little rich. Let's drop it down. Let's go the other way. Let's go $2 the other way, make it down to about $11. And you can see now our price to sales is looking a bit healthier, when we drop down to $11. So really, how much should Tesla be trading for, and how much should they pay for it? those are big questions to answer, and I think it would take a little bit more homework. Honestly, the next earnings report I think is going to be a little bit more telling. And honestly, it's a quiet period right now for Lucid. They literally can't tell us what's going on. They can't comment on it until at least when they do their earnings announcement on February the 22nd. So maybe we get some light shed on it at that point in time. And so we'll have to see what the stock market is like by then. We'll have to see what Lucid's price actions are like by then. We're going to have to see how people respond to rumors. So will the PIF buy Lucid? Honestly, if they can see the road to profitability, I don't see why they wouldn't. The next big question is, how much are they willing to pay? In order to answer that question, we'll have to watch as the earnings come out on February the 22nd, and perhaps we get more of an announcement. Maybe we get more forward guidance for Lucid from here regarding a possible buyout. So that's what I have for you for this video. I hope that you enjoyed the information. Let me know down in the comments what you think about this research. If you think there's something that I'm missing or something else that I should include, please let me know down in the comments. If you would like to support what I do here, check out the links down in the description. I got Moo and Webull down there. You can sign up, deposit your money, and you get free stocks. So that's free money for you. Also down there is a link to the Patreon. I have this spreadsheet available over there with my write-up and with my analysis that follows it. Also over there posted for you at the Patreon. I'd absolutely love to see you over there. That said, I'm Dr. Stock, Doctor of Education. We'll see you in the next video.